Government shutdown could be over, but all of this is amidst a lot of chaos today. We'll break it down for you. Let's just jump right in. Let's take a look, of course, at our sponsor, and that is Tangem. This is where you guys can get into self-custody. And right now, under these circumstances, this is a good time to do it. If you want to lock up your crypto in a secure place, you can do that by just jumping over to tangem.com. Get your own self-custody set up. It is very easy to do. And one of the things I would always recommend is get the 3-card set. It's very simple to set up, happens in minutes, works with your iPhone or your Android. Use our link, gets you a little bit of a discount. You can start your own self-custody journey, so get into it. Chaos continues, and just a few things that have happened over the weekend. Trump announced 50-year mortgages. I'm not in agreement with that at all. Of course, you guys know my position on real estate right now, a little bit soft. Trump also announced the $2,000 stimulus check. I'll talk about that in a second because there may be a little bit of a caveat to that. He also says insurance money should go to the people. That I agree with to a certain extent. Trump says tariffs will begin paying down U.S. debt. Don't know how much. And of course, no more money to insurance companies. That's the big one, which is a bit of a pivot from Trump's administration. It'll be interesting if he does start a campaign trying to go into a healthcare reform act that could adjust to a lot of this. Let me get into the first one, which was the 50-year mortgages and why this is such a bad idea. Take a look.
So it's interesting. We ran the math. It's about $120 in savings per month. It increases buying power by about 5%, so call it $20,000. But it's not a clean shot, right? There's things to consider. One, the average home buyer, first-time home buyer, is 40 years old. So many of these folks are going to be deceased before the mortgage is mature. The other thing to keep in mind is that it doubles the amount of interest that you pay over the term of the loan versus a 30-year. So, you know, it's actually building equity becomes more challenging.
Yeah, that was really what I was leading you to. Yeah. I mean, it's going to make every house considerably more expensive over time. And we're trying to make homes more affordable, right. But while it make it affordable month to month, I guess long-term obviously would increase the cost. But according to your research, it's actually cheaper to rent than to buy now. But also, more of these people are in the stock market. They're putting their money in other places as opposed to a home. And some of the sentiment around the quote-unquote American dream has changed.
Listen, I agree with this, guys. My status on real estate is it is no longer an investment vehicle. I think digital assets and other risk assets in general, even if you look at gold and silver, these are the assets that are appreciating in value. And you're not going to be in this kind of scenario where you're going into lifelong debt. I totally disagree with that. If you are going to go to real estate, you need to figure out how to either, one, reduce the mortgage down to the 15-year notes, because that will save you a ton in interest, and just buy less house. I think that is going to be a factor. I know that's easier said than done, but that if you are going to have real estate involved, or do a full balance sheet and compare the difference of investing in a home versus investing in digital assets that appreciate at a faster rate. Think about that and what it might look like over a 10-year run, because you need to look at a 10-year run on this. This, of course, gets into more economic stress right now. The airlines right now are on meltdown watch. Take a look at this clip.
It's pretty bad right now. More than 50% of flights were delayed or canceled yesterday of the major U.S. carriers. I mean, we're hearing horror stories, 50 planes in line to take off at LaGuardia, and then at the last minute, crews timing out. So this is a situation where, there's several airlines on the verge of a meltdown like we've seen in the past, just because their crews are timing out, planes aren't where they need to be. The air travel system is so interconnected. So they're doing their best, but especially with any other weather that comes in, it could really spiral things for the next week or so.
I mean, you're basically telling me, I was supposed to be on a flight this morning, a 6 a.m. flight. It got canceled just after 3 a.m.
Yeah.
And by the way, there wasn't a notice that came out. I noticed it on the app before the notification came out. What are you telling people who are supposed to be traveling, other than just don't do it?
Yeah, if you don't want to travel, don't take a voucher, take the full refund. DOT rules, even if it's for the shutdown, take the refund.
Yeah, this is a big deal, and I don't even think that they have completely explained the impact this is going to have on the air traffic control system, as well as the overall airline scenario that plays out. And here's what I'm getting at. A lot of these airline carriers have to put people and equipment in place. So what you're dealing with is almost like a domino effect or a trickle-down effect that will start to be much bigger of a problem. This is not going to just go away because this is already in place, and we're still talking about a few more days before we get a potential opening. President Trump came in, though, and doubled down on something that I do not think is a good plan. And he basically says, hey, air traffic controllers, get back to work. He's basically recommending a bonus of $10K. I don't think that happens. That's a bunch of fluff of anybody that didn't take time off. But then he goes in and says he's going to dock people, of which I don't think he's going to do that or have the capacity to do that either. For those, why would you get docked if you're not getting paid to be able to go to work? So these are the problems I think that we're going to continue to see in the airline industry. If you're owning airline stocks, probably not a good time for those right now. Other things that are going to happen right here, if you look at the major headline this morning, this is all in reference to the Democrats starting to splinter on what we're dealing with right now and getting in terms of the government shutdown. But the bill gets workers paid through and the lights on until January. Remember, the issue of getting the government back open is really only temporary because this is still going to go into an ACA vote, and this is most likely going to hit us in January, meaning the likelihood you're going to have another government shutdown. All of this does not look good for crypto and or any kind of asset in reality because the market uncertainty is the problem of what we're dealing with right now. If you look at the lineup of people that basically flopped or flip-flopped, these are the Democrats. Now, this was Schumer, and the theory behind this is that maybe, just maybe, Schumer actually had these people fall on the sword. Most of these are not running for re-election. And this is what you're dealing with right now at Capitol Hill. This is the kind of politics that are being played. You guys know how bad it is out there, so don't be surprised with this. But what it does do is it pushes the can down the road, and it is not a good road. It's a rocky road going into 2026. Take a look at this clip.
This really just moves the ball down the field for 2 months. And that people that need food help can get food assistance during the holidays. But then you're going to face another opportunity to shut down the government. And in between there, you got this vote on health care. Tell me about the negotiations behind closed doors. How many Republicans do you think right now are willing to vote with Democrats to do something to relieve health care costs for millions of Americans?
Well, I can't give you an exact count, Claire, but I think it's in double digits because these increases are going to be affecting Republican constituents as well as Democratic constituents, and I think they're really concerned about it. Is it going to be a straight-up extension of the ACA tax credits? Probably not. And so I guess the question is, and you're right. I mean, we have to have 13. We're going to have 13 Republican votes to get a bill through. Is that possible? I think it is.
This is going to be a big hill to climb, I think, in reference to what Angus King was talking about. He was one of the senators that ended up voting to try to get this reopening done, which is what we're facing right now. But the likelihood is this happens in January. And here's the real issue. And I think this is going to affect both the Republicans and possibly even the Democrats because it's a very bipartisan impact. And that is the constituents are getting ready to get reality brought into them when they look at how much their insurance rates are going up. That'll happen in January. And I think you have till the end of January to lock in. This is going to absolutely explode into the political framework. And I think this is a factor that we are going to see happen for sure. One thing to kind of consider here, because you look at a government shutdown, likelihood is normally when this government shutdown is over, you're going to get an immediate market reaction, especially one that's gone for the longest in history. You would think you'd get immediate reaction, but I think this is what we're seeing right now in the crypto markets and in traditional markets is that there's so many balls in the air, there's so many problems that have not been resolved and could still be a problem where we're going to continue to see these kind of divides in DC. This, of course, is the Polymarket. Right now, it looks pretty good on November 13th, which is just a handful of days away of possibility of getting reopened. So the likelihood is we are finally there, but it looks like it's going to be very short-lived. So bull run could be very, very short-lived as well. However, the biggest crypto pump catalyst this week would be just that, and that is a government shutdown. Even though if you look at the charts, let me jump over there real quick. If you look at, let's go up and take a look at Bitcoin, up slightly over the last few days. I think obviously the big winners have been, there's tokens on XRP up dramatically. Uniswap has been a big winner. So it hasn't seen a lot of impact coming in from what has been existing in the fact that we now have good indicators that the government shutdown is going to be over. So that is the real question right now. What would drive the market to the next level? Well, one of the things that you have to kind of consider is going to be consumer sentiment, because we still have some big issues ahead of us, including the holidays, which is going to give us possibly some bad reports in January, along with the fact that we're going to see insurance rates rise as much as 5x or more. This is all coming to a head in a very inopportune time with where crypto is. So one thing that could be happening is that Trump is a nature of the people. In other words, he understands where the flow of the markets are going. And I think he's probably starting to get a little bit of a whiff that the sentiment is starting to turn on the Republicans. It might be the situation where we're starting to see, one, the dividend check possibly coming back from tariffs. Two, him attacking now insurance companies, telling Republicans that we need to adjust this, and maybe him starting to do something that hedges toward positivity into the markets. That's the one thing that could be. So there's a very good possibility we could see a surprise coming up in the next few weeks. So this is a good example right here. Trump announced the plan to use tariff revenue to cut national debt. He also says that the 2,000 stimulus checks would go to low, middle income Americans, not to anybody that is earning more than middle income wages. So that is a good positive possibility. If this was Pompliano saying this, if Trump actually gives $2K to each person out there from tariffs, he's saying that this is definitely not inflationary. It's just a matter of time before critics admit it. I'm going to be a critic on that one because I still think these tariffs are inflationary. And I changed my position because you look at the results of where the market has been and the amount of increase that we've seen, and the fact that we've started to see real impact on businesses. And what I mean by that is foot traffic has really dropped dramatically on retail. This has all been because of what we've seen around a real shift in our economic front lines, which of course is being brought to you by these tariffs. One thing to consider though is this right here. This tweet kind of breaks it down after doing a little bit of research. The $2,000 dividend, not a typical stimulus check. Scott Besson actually was doing some damage control on this, maybe trying to offset this a little bit. And what he based it on was that these were the areas where we've actually already delivered. When I say we, the federal government has already delivered on this $2,000 stimulus check with no tax on tips, overtime, Social Security, and deductibility of auto loans. Basically, he's saying, you already got the money. The check's in the mail. This was done in terms of his interview where he was breaking this down. Now, at the same time that this was being done, you still have Trump over there doubling down saying, you will get the 2K. So maybe Trump will look at this and say, not going to be the case. We're going to go ahead and give the people the 2K. If that were to happen, that would be very beneficial, I think, for most Americans. Let's get into this, though, and that, of course, is where the Fed rate is going to be in less than a month away. We've got a December rate cut coming at us, we think, or at least on Polymarket, it says we're going to get one. But this clip explains where it might be. Take a look.
So how are you thinking about the economy without the official data releases?
Yeah, so absolutely it would be better to have more data than less data. That's absolutely something that would be the case. Nevertheless, we do have some data. And I think if you look at what's happened in the last few months, you go back to the September meeting of the Federal Open Market Committee, the median participant in that summary of economic projections was projecting a 3 cuts this year. So a cut in September, a cut in October, and a cut in December. What's happened since that happened, since we put those projections out? Well, we've gotten new inflation data, which were better than expected, which would make one think that it would be reasonable to be incrementally more dovish than at the September FOMC, where, again, the median projection was for 3 cuts. And on top of that, labor market data have come out with with the labor market continuing in the trajectory it was on, which is one of gradual softening. We do have some data on openings, on new openings that are available. We have some data on wages, and we have some data on jobless claims, and all of those are consistent with continued incremental softer weakening. So I would think the reasonable thing to be is incrementally more dovish than we were in the September FOMC, which again indicated 3 cuts.
So you favor what, another 50 basis point cut in December? That's what you wanted the last 2 meetings?
Well, look, nothing is certain. We could get data that would make me change my mind between now and then. But failing new information that made me update my forecasts looking out in time, yeah, I would think that 50 is appropriate.
All right, so there you have it, a 50 for December. However, Polymarket doesn't see it that way. What we're looking at right now is a quarter basis point cut at about 69%. That in itself may be a little bit bearish if you look at where the market is along with all the other things that are in the air. I think the only surprise that comes in that would be very bullish for the market is going to be a scenario where we see clarity come through with flying colors. And that may happen if we get a reopening on this week. On Wednesday is kind of where it's been targeted. You look at this right here. You thought Tom Lee was done. He's not done. You sold him cheap ETH, and this is back to the people. And there's a few of you guys out there. And I'm talking to one of you guys right now. You know who you are. Where they sold ETH at around 3,200, which is fine. I get it, guys. That's not a problem. Take profits wherever you can. I understand that. But Tom Lee was out there buying another 110,000 ETH in the past week. Now, will he wait for the ultimate buying position, which we think is still around 2,700? Do we get one of those reversals? Very possible. Still all in the cards. Does this play out into 2026 is the bigger question that everybody is looking at. Have we seen an elongated system? All right, with that, let's go over to the ETH chart right there. You can kind of see a little bit of a correction as we are on the daily, where ETH is slipping back above 3,500 as we're filming this today. And of course, Solana actually came off the floor after several wicks holding on that position around 155, now starting to pull back in at 166. So interesting times ahead, guys. Are we in for a big move toward Thanksgiving and Christmas? Let me know in the comments down below if you think this is still a bullish market. I'd like to get your opinion on this. If you're not in the Diamond Circle, get in on that. And of course, follow me out there on X, which is out at Paul Barron. We'll catch you next time right here on The Paul Barron Show.